forgot to use the mic. It's. Thank you, sir.
Mark Mathers,
Here.
Fran McGregor, here, Mary Lamont,
Here.
Jeff Kurz,
Here.
all are present.
Okay, we no longer take public comment at the beginning of the meeting. So with that, we'll move right into items for presentation, discussion, information, and/or action. And our first item is an action item. It is item 2.01, approval of the minutes of our April 29th board meeting. I knew it had been a long time.
Yeah.
I mean, it seems like forever since we had one of these. Were there any changes to the minutes, Mr. Kurz, since you are our editor-in-chief?
I looked at them and the only thing that I was wasn't really a question, but it was the example that we have in there about from the fellow from Buckhead,
Uh-huh.
where he says an example in 2048 OPEB has 1.507 million in projected liabilities. So that's correct, right? Because it's just for the 1 year.
I'm looking at which,
It's paragraph under two.
yeah, he's picking out 1 year.
Okay.
Yes, yes.
Yep, that, everything looked great to me.
Okay, do I have a motion to approve? I'm sorry, I must take public, yeah. Any public comment out there? Seeing none.
I have a.
Oh, you have a
thing.
change.
I don't know if it matters, but the M in Lamont is not capital. On the last page, it's there twice. Up until then, it's correct. That makes a difference. I'll leave that up to you.
Well, we will go ahead and change that.
One time it did make a difference.
Yeah, we will go ahead and change, there must be a story there, but we'll go ahead and change that. Thank you. All right, seeing no public comment, is there a motion to approve?
Fran McGregor, I move that we approve the minutes of the April meeting.
Do I have a second?
Mary Lamont, I second that.
Okay, all those in favor say aye.
Aye.
Nays? Seeing none, the motion is approved unanimously. So our second item is a longer one. It is agenda item 2.2. And so Mindy Capron, our Assistant Controller, is going to present our audited financial statements for the fiscal years ended June 30th, 22 and June 30th of 23. You remember Crow, our external auditor, was a little bit behind, to say the least, in terms of completing their audit of these financial statements, but they have been completed, so we're getting caught up to speed. And Mindy, can you go over the highlights then?
Okay, thank you. As Mark said, they were behind, and their firm doesn't allow us to issue like 22 when it was finished, so we had to wait for 23 to finish. So both years have a clean opinion. They are pretty much, the assets are what we had on our financial statements. I'm not sure if you want me to really go through too many of the details, since that's kind of stale information, but like I said, the opinions are clean. I'm gonna flip to the 23 statement,
Okay.
which is the second statement in this. It says it's page 44 of 67.
Okay.
So you can see the total assets. Back in 23, the total was $81,910,022. The page 45 are contributions. Sorry, should have brought my glasses. Contributions and expenses. We have a net increase of our net position. sorry, of 6,304,000 over 22. So they are now going to be working on 24 when we do the Washoe County School District 24 audit, so it won't lag again. It'll be up to speed with our other audit, so. Does anybody have any questions?
Mindy, there's also a letter from Crow in the back regarding internal controls, and that was also a clean opinion, clean bill of health, correct?
Mm-hmm.
Okay. So I think everyone's seen these numbers before, as you said. These reflect the quarterly, they match the quarterly
Right.
reports that we give you, specifically the ones ended June 30th. No changes here to the numbers at all. Okay. Okay, seeing no questions, is there any public comment on this item? Okay, seeing none, do I have a motion to approve the financial statements for the fiscal years ended June 30th, 2022 and June 30th, 2023?
Fran McGregor, I move that we approve the financial statements for ending June 30th, 2022 and June 30th, 2023.
Very good, do I have a second?
Mary Lamont, I second that motion.
Okay, great. Any further discussion? Okay, seeing none, all those in favor, please say aye.
Aye.
Aye. Opposed? Seeing none, the motion passes unanimously. Thank you. Thank you, Mindy. So our next item is our unaudited financial statements for June 30th, 2024. So we just keep skipping along by fiscal year here. So Mindy, you want to go over the highlights of this?
All right, so the balance sheet, the assets are up to 92,235,000 at the end of June. The increase is basically in our investments, our unrealized gains turned into realized gains during '24. So it increased our investments. I'm looking at page 63 of the packet, so that was the balance sheet.
I'm sure Mr. Kirst is going to ask this, so I'll just be a spokesperson. Is that okay?
Of course.
Can you explain why cash was negative?
We haven't transferred cash from RBIF into our bank account in Wells Fargo. So we have two different bank accounts
So we overdrew our Wells Fargo account.
on paper, we did.
Okay. And so the general fund is basically covering that liquidity issue.
Right?
So,
Well, we had some entries we were doing back and forth and for the medical, and so we
Okay.
hadn't decided on a number to transfer, so.
okay, okay. All right. Did I do well, Mr. Kirst, as your spokesperson?
Say that's superb.
All right, so then on page 64, our revenues were 14 million for the year of '24. The expenditures were 3.8, and that does include transferring some items over from our health insurance fund. That gives us a net change in our position of 10,325,000 increase. So that brings up our net position as of June 30th to 92,235,000, which is, like I said, better than last year for the investments that we have. And for what it's worth, we were ahead of our budgeted number as well, so. On page 65 is our RBIF detail. You see realized gains for the year was 7.6 million, and that's a 7 million swing from the year before. So the change in unrealized appreciation turned into realized gains and increased our value in that fund. Anybody have any questions?
So just as folks kind of review this a little bit more closely, Mindy, so these, as we close our books, which we're still going through, but as we close our books, we'll have Crow auditing our financial statements for OPEB roughly at the same time they're auditing our financial statements for the district. Is that
Correct.
the plan?
Mhm.
Okay, so we'll be current.
We will be current.
Yeah.
We've provided them with all the information, or the actuary with all the information he needs, so we can get that in there. So, yep, we'll be current.
Okay. Anyone have any questions, or are you ready to make a motion? In the meantime, I'll take public comment. Okay, maybe not. No public comment. I stalled. You know, it was 10 seconds stalling. I'm sorry. I didn't do better on that. I really should. You get the people down with the library books to come in here.
No, don't get those.
Oh, no? No? Oh, okay.
I'm gonna be sick that
A little
day.
excitement for
Yeah.
Kevin. Police these people.
Stay on the agenda.
Oh, okay. That's right. Okay, if there are no questions, I'll take a motion to, well, actually, I'm sorry. This is just for discussion. I'm sorry, I apologize. Okay, seeing no questions, we will move on to agenda item 2.04, and this is a kind of a really technical matter. Again, not an action item, but just a review of the budget that went in for the OPEB trust. This is agenda item 2.04. It's a one-page item that shows you, again, the OPEB budget that is part of the district's budget that's submitted to the state. Here you can see, estimated returns and contributions by the district of contributions by the district of 2.1 million. We estimate returns of 5.44 million, but, again, it's just a best estimate based on expected returns in the stock market and bond market, and we'll see how things go. So total revenues, if you will, of 7.5 million, and then total expenses of 5.15 million. So, this will serve as the limit to what our expenses can be and what our reimbursements to the health insurance fund can be. So it's important in that sense that we are bound by our budget. If revenues exceed budget, we can augment the budget. But are there any questions about the budget? Pretty much tracks with prior year's budgets, no real significant changes. Any questions then? Okay, no? Mr. Kirsch, do you have a question?
I have one question in the sense that we had discussed our business with Buckhead
Yeah.
last time.
Yeah.
And should we come to a conclusion as to what to do about that, do we modify this budget, or is this what we keep with?
So it's a great question. So at the time, we're required to submit our budget to the state, which is June 8th. None of the changes to the investment parameters, the portfolio. Our portfolio investments had been approved by the Committee on Local Government Finance, and I'll talk about that in the next item, kind of where we got to. But at that time, none of that had been approved. So likely what we will see, and it's a good question, is revenues that, because we've de-risked it and got out of the stock market, we would expect to see returns at a far lower amount because we've kind of locked our money away. But when that happens, you don't need to adjust the budget. You'll just see realized revenues lower than the budget, and that's okay.
Thank you.
Yep. Okay, moving on. The next agenda item is for presentation discussion only, and it's agenda item 2.05, and that is a follow-up on the direction the OPEB Trust Committee gave last time and the vote last time, and that was to do a number of things. One was to contract with Buckhead Capital as our outside asset manager. Another one was to go to the Committee on Local Government Finance with an investment plan in order to invest out longer than 10 years. And then kind of if those steps were approved, to execute on that plan. So you remember the discussion was to basically withdraw out of the retirement benefits investment fund, to the amounts we discussed, and invest those in U.S. Treasury strips out to 50 years or longer. So lots happened since April. I will spare you all of the excruciating details as we tried to execute on this. The bottom line is we executed just this week on those investments. How we got there was we have executed a contract with Buckhead Capital as you directed me. So we joined on to the state's contract with Buckhead Capital, which is allowed per our procurement policies and regulations. So we brought Buckhead on board. They and I drafted the investment plan, and in that plan we talk about our strategy and how we've funded our cash outflow liabilities and kind of creation of 3 different accounts. One would be that asset liability matching program, right? And the allowed investments there are strips. So as we've identified for every year, projected liabilities, this account would structure investments to match off those disbursement dates, dollar for dollar. Then there's a liquidity account, just knowing that projections are always a little off. We need a little bit of cash. We need cash to pay Buckhead or Crow. So there's a liquidity account, and that's invested in a money market mutual fund. And then the remainder is still with Retirement Benefits Investment Fund. So that's what the investment plan basically outlines. We took that to the Committee on Local Government Finance as required by state regulations a couple weeks ago. They approved it. No real comments. Along the way, we had to create a new account at our custody bank in OPEB's name. So it is in OPEB's name, not the district's name. Then we processed a withdrawal request to Nevada PERS, the RBIF account, of $77 million. In between April, when you gave this direction and voted to do this, and August, of course, in the markets, a lot was happening. So Mindy can probably attest to, on a daily basis, me being stressed out that the markets might move away from us, and we might not be able to execute on the plan. But as it turned out, we're actually so we got the custody bank account created. We got approval from the Committee on Local Government Finance. We processed a withdrawal request to RBIF of $77 million. Had to convince them to get our money a little faster than what their normal timelines are. We got our money Tuesday, and we bought securities as outlined in that plan on Tuesday. So I can provide at our next meeting, it wasn't in time to get this in our records, but I can provide for our next meeting kind of again, the costs that were spent to invest in those securities. We actually did it a little cheaper than what you heard in April. It cost us less to actually do that asset liability matching and immunization than we talked about back in April, which is kind of amazing. So we've locked away our money in those securities versus being invested primarily in the stock market. We still, again, have, 10 million or so in the RBIF account, so that will ride or fall with the stock market mostly. So we'll see how that goes. So it all worked out nicely based on the plan that we submitted to you and you approved in April, with 2 days to spare. Like I said, Tuesday, we got it done Tuesday before today's meeting, so.
Jeff Kirst. So we have all of those strips that Buckhead outlined to us,
Yes,
which match the needs of our beneficiaries.
yes,
And then there's $10 million
roughly.
roughly of stocks divided up amongst the domestic, foreign, and then bond also.
That's right. That's right. We'll get you precise numbers for next meeting. I think at the time we had roughly 90 million in assets. So our withdrawal request was 77 million. We didn't actually use all 77 million. I think we only used roughly 75 million to make those investments. So we've got 75 in those U.S. Treasury strip investments, 2 million in that liquidity account, and then the rest, it's more like 13 million in RBIF. But we'll get you precise numbers for our next meeting.
So then the OPEB is 100% funded, based on
Yes.
what the actuary said.
Yes, based on actual cash outflows. They will still show that, a funding ratio in their actuarial report of less than 100%, because again, per GASB requirements, per accounting requirements, per their own professional requirements, they're required to quantify that implicit rate subsidy and other non-cash items, and we're always going to have that. But again, we collect enough through that blended rate that retirees and active employees pay to cover, our life insurance premiums. So it's a paper entry, if you will. It's a balance sheet entry, but it's not a cash outflow. So I want to make sure, right? So you're going to still get reports that say we're 80% funded or 90% funded, but again, a great portion of that liability is a paper liability. And what that would mean is, if we wanted to collect and cover that, what that would mean is it doesn't necessarily change the rate people pay for their life insurance policy. It just means the health insurance fund gets more money to cover that implied rate subsidy that active employees or subsidized retirees with. And I'm sorry, I know this is confusing, but we're already collecting 100% of the premium. So it's just a way to kind of offset that subsidy to ourselves, and we don't have to do that.
In the event there are large fluctuations in the bond market with regard to interest rates, and it shows a profit on that $77 million, is it possible to sell those and reinvest it in something else?
It absolutely is. State regulations require, when you create your own investment plan, which we have, and we're using an outside asset manager, which we're doing, that you'll see that investment plan every year, whether you like to or not. And so there will be discussion of situations like that. If we have a large unrealized gain, what we might do. I just liken this, though, to, not to get too technical, but when you do an advance refunding of a bond that we've sold, and market's moving and we can refund that bond like you would refinance your own mortgage. We put monies in an escrow account. Well, you want the safest, most secure investments in that escrow account, and so those are treasuries, right? This is somewhat the same thing. We're defeasing those liabilities. So we want to be careful in not taking any credit risk when we
Right.
do that. But absolutely, that investment plan will come back to you every year, and we'll look at those investments going forward so that you can see the market value versus the book value of those securities. And we can have that discussion at any time, really, at any meeting.
Thank you. With the $2 million that's in the liquidity fund, if you would buy a 5% treasury, you could get $100,000 for that.
Yeah.
So we just let it sit there? But
It's-
where we have the ability to be $1.3 million overdrawn in the account. Correct?
It's
Sort of.
a paper
Paper.
transferring the money from, like Mark said, the health insurance fund to.
So better to just let it sit there and
Well,
be minimal?
It's invested in a money market fund that is earning over 5.
Yeah.
Now, if the Fed cuts rates, right, then it won't be at 5. But it is invested and generating returns. I'll share with you the investment plan that talks about the eligible investments in that liquidity account. But really contained to short-term investments because, again, it's there to provide liquidity. Now, we can always, this board can always choose to reduce the amount in the liquidity account and go back into RBIF if you want, so, or like, we can talk
Yeah.
about other approaches, going forward.
Thank you.
Yep. So all's well that ends well, but it was sure painful getting there. It was, you try to do something different in government, and man, there's just someone there to block you every step of the way, it feels like.
Mark blamed the universe.
I would say the universe is trying to thwart us. There's something, yes, it was that challenging, but we did it. We did it. Yeah,
Congratulations.
Thanks.
Good, I think that's
yeah,
just what we need for the beneficiaries.
yeah. It is a safe investment for beneficiaries, absolutely. Yep. Okay, with that, we'll move just to another discussion item, agenda item 2.06, and this is just a report of RBIF's returns. We don't have it for June 30th of 2024. We do have it as of March 31 of 2024, and it was nice in that we've seen a rise in the stock market. I don't know how long it'll last, but our one-year return in RBIF was just under 18%. So certainly having monies invested for so long in the OPEB trust, it really benefited the district and beneficiaries. I did ask PERS about the fact that they now have 12% in cash. And their comment back was they're maintaining a 40% allocation fixed income. They just now are splitting it between 28% to longer term or intermediate bonds and 12% in cash. So that was a decision their board made to kind of split out their target asset allocation that way. Kind of caught me by surprise, but and there should be returns shown to the right of that, and I pointed that out to them. But anyhow, returns were strong over the last year as of March 31 for sure. Any questions?
Jeff Kirst, in the future, when we get this report, it will reflect the $10 million that's
Yeah.
left.
Yeah, what we'll need to start doing is designing some report for you that shows you our investments, and then this will reflect, the returns on the monies we have in our BIF, the 13 million or so.
Okay.
Yeah. Any questions? Okay. Our next agenda item was going to be receipt and acceptance of our actuarial report for June 30th, 2024, but we're not quite done. Our actuary is not quite done with that, so we don't have that to give you. You probably saw that. We'll have it for the next meeting. And then our last item, it is for possible action. This is an item our actuaries have asked us to do, and that's to make an annual affirmation that all investment income earned by the Washoe County District OPEB Trust Fund will be used for future benefits of the trust. I think this kind of is in compliance with 501c3 kind of requirements. While you mull that over, I'll take public comment. Okay, seeing no public comment. Any questions about this? We've done this annually for a number of years. Kind of pretty basic and.
Jeff
whatever.
Kirst, one question about it. With the change in the way that income comes into the OPEB, will the district be expecting to have money come out there monthly, or will it still be the same where they make a request, the Board of Trustees makes the request to please transfer so much?
It will be the same, and great question. You see that reimbursement request that has to go to our Board of Trustees first, and then it comes to you mid-year. We actually don't process any reimbursements till don't process most of those reimbursements till the tail end of the fiscal year. So we let OPEB have all that money, right, stay invested, see hopefully higher returns, and then we'll process transactions in June if there's a need to reimburse the health insurance fund. So that,
Negative because the cash kind of trails behind those entries.
yeah, there's some fiscal year closeout activity there. So, but yes, that process of reimbursement request will operate exactly the same, and because that is a state requirement. Okay, I guess I need a motion to affirm that all investment income earned by the OPEB trust will be used for the payment of future benefits.
Fran McGregor, I move that we approve the annual affirmation that investment earned by the OPEB trust will be used for payment of future benefits of the trust.
Do I have a second?
Jeff Kirst, I second the motion.
Okay. Any further discussion? Seeing none, all those in favor say aye. Aye. Opposed? Hearing none, the motion passes unanimously. And now we go to closing items, and once again, we're waiting anxiously for public comment. Do I have any public comment? You, sir? No. Okay. No public comment. We'll close that out. Our next meeting is right before Thanksgiving. So hopefully we'll have a quorum. If you can't make it, because of plans, if you could let Dawn know, and then we can try to reschedule. We also may have finally a fifth trustee. We are a 5-member board, and so we should have a full board at our next meeting, just as an aside. So with that, I will adjourn the meeting. Thank you for coming. Next time, I expect some public comment.